This meeting is being recorded.
Good morning and welcome to Monday. I'm your host, Ashley Scott, and today I have the pleasure of bringing you Mr. Everett Allen, the CEO and founder of Secure the Legacy LLC. I'm excited because this former basketball player turned financial planner is about to teach us how to be able to plan for our retirement, save some of those coins in our business, and moreover, really how to create your own private bank. So we're going to get some really great nuggets today, and I'm really excited to introduce you to Mr. Allen. Hey, Everett, how you doing today?
Man, I'm doing well, man. Thank you again for, having me on the platform, man. It's a pleasure to be able to take this time, man, and talk culture.
Yes, that is what it's all about. So I would love for you to just talk a little bit about how you found your passion in financial planning after transitioning from being a former football player, or is that right? Football pro?
Basketball, I'm in the
Basketball.
weight room,
I'm
so
sorry.
you might think football, but I'm telling you, the jumper's still wet. Some things it's like it got to be in you. It's like Gatorade. Um, but man, I never thought in a million years that I would be here in my life. All I cared about was, playing ball. That's all I cared about, was making it to the NBA. I've traveled the world. I've, been in about 12 different countries, playing, basketball, and again, from my background, you would think, if you see me now, you're like, well, how did you, this don't even make sense. Right. And so I went through those stages when everybody in my life remembers me from playing basketball. And I say, hey, I'm getting ready to do this. I had people actually laugh at me. Right. I had people call and like, what are you doing? Like this, like you going to be a financial advisor? Like you that guy in the club that's spending $1,200 on Patron shots. Like this is, you going to tell me how to take care of money? And so, through the grace of God, I was able to, make that transition. I'll tell you how it even came up. I've always been someone who has friends that are in different things, than our background. And so I met this old white guy one day, Ashley, and we became friends. It's like a 60-year-old white man, and we started a venture through another path for music. But I get to talking to him. I'm like, hey, I see you in a new car every time I see you. You changing your place of residence every 3 months. Like this is not normal. Like what do you do? And so this guy told me, his name was Milner Carter. He told me that his mom was one of the founders of Pride America. And she helped get that business started. And this was her son. She was one of the 7 founders that started it with Art Williams. Now, because she started that venture, now her 3 kids receive income for the rest of their life. And Milner Carter gets $50,000 for the rest of his life. Right? When he passes away, somebody else falls in line in his place and they get the 50,000. And it just continues to go because she set that up. Now, Prime America was not the place that, I called home as far as my business, but the business model is what I said, I need that, for a young Black man. Like I can get in there now and, I got some time to set this up for my kids. So when they do get an age, I can just pass the reins and continue that income for them. And so that's how it all started for me.
Okay. Listen, I believe so firmly in the power of network marketing. And sometimes I had a good friend who was in Prime America. And that's how I first got introduced to insurance products, was through somebody who was a good friend who was working the business. And I know a lot of people who are doing very well in those businesses as insurance people. But what I really sets the thing apart about it for me is I think about how passionate all of those individuals that I've connected with through Prime America or these other ones that are out there. And they want to make sure that your family is taken care of after you are gone, right? And I think that's a big part of what you're talking about. I know you want to talk a little bit more about private banking and guaranteeing your retirement with the power of the index. So let's talk about just how these types of insurance products, or just any kind of the products, and then I want to round it out before we get out of here and really talk about business, because I think talking about the personal side and the importance of looking at your family as a business, if that makes sense, because that's what it boils down to. Like you said, that family, his family is passing that $50,000 down every generation, the next person in line, the next person in line, the next person in line. That's because you have to think like a business when you think about your family. So you want to get into that a little bit more?
Yeah, definitely. And so when we're talking about, how Milner was able to get this income from his mom, it's because they had a trust set up. And inside the trust is the private bank. And that's what we're talking about now when I say how to create your own private bank. There was a book that anybody that's, listening now and been touched by this platform can get, and it's called "Becoming Your Own Private Bank," and it was written by R. Nelson Nash. And so, how I create private banks for my clients is I really look at what we call an inefficient dollar. When we look at how we bank, right, there's something called the line of zero, right? And so we build this money up in our bank accounts, and when it's time to make a purchase, we spend it and it goes right back down to the line of zero. And so we call that giving away, right? Of forfeiting the right to earn interest off of that dollar, right? So we forfeited the right to earn interest off of our dollar. Now, the other way is that we take what we got our credit and now we go this way, right? And now we work our way and pay that credit off, pay that whatever that bill is to get back to the line of zero. But now we're giving away that ability to earn interest off of that dollar, right? And so we got two sides of the coin that most of us are doing right now, not even knowing that we're doing it. And so creating your own private bank is a way for you to be able to save the money that you want to save. But when you spend it, only in the life insurance contract is there something called the non-direct loan recognition. This is the only platform that you can get this. So non-direct loan recognition. So what they do is in this private bank, when you save up $10,000 and I need five to spend it on something, maybe it's a business expense, maybe it's paying off a debt, maybe it's vacation. I fill out this policy loan and I send it in, and the life insurance company that we use sends you their $5,000. So your 10,000 is still gaining compound interest, right? Every time you put money into your private bank, it never leaves. It never leaves. And so you're getting uninterrupted compound interest, right?
That's amazing. Is this something like anybody can have? Is this like this some secret line item or specific kinds of insurance policies?
Well, I mean, yeah, it's a special time. It's a specially made life insurance contract, but you do have to qualify for it. It's not like, I tell clients all the time, this is not like going to Walmart, picking this thing off the shelf and going to the front and paying for it, right? We got to fill out a request, an application. They have to say that they're comfortable with you, and you have to agree to be comfortable with them. And then you start your plan. All right. And I structure it a lot of different ways. So, one thing that I talk about with clients, Ashley, is, regardless of, what you do for a living, right? Whether you got a job, whether you own a business, whether you got a pension, whether you got an inheritance, somebody gifted you the money. There's only four things that you can do with the money once you give it, right? You can save it, you can invest it, you can spend it, or you could give it away, right? Those are only four things you can do with the money. And so when you have your own private bank, all we're doing is before you spend the money, before you give it away, before you do any of those four steps,
Invest it.
we're going to put it in our private bank first. so
Okay.
that we can get compound interest off of it all. Now, with your private bank, it also comes with a death benefit.
Okay.
So when I'm structuring this, Ashley, I'm going to take you through the steps, right? You ask,
Mhm.
what is this? I'm going to take you through the steps. All right. So step one is based on what the client needs, based on how much they want to pay, I attach that to a small whole life policy.
Okay.
Right. Step two is I attach the whole life to a term rider that normally falls off in about 10 years. I only need the term rider so that I can manipulate how much insurance we have in total for us to be able to use step three. Step
Okay.
three, all the paid up additions. That's your bank. That's the insurance term for bank. It's called PUA, paid up additions, right? So the paid
Mhm.
up addition is 4% anytime you put money in here, right? 4% interest. All right. Now, normally, based on someone's income or how much they want to put in, then we have to determine what is going to be step four, and that's called the MEC or modified endowment contract. Actually, let me ask
Mhm.
you this question. When you build a house, what's the first thing that you build?
The foundation.
The foundation. That's right. So you can build anything you want on top of the foundation as long as it doesn't go outside of the foundation, or else what we're building can fall. Right. So
Mhm.
I might have a client that wants to pay, $500 a month, right?
Mhm.
200, whatever it is. All right. So we'll say, hey, this 500, 80% is going to PUA. That's going to go to
Mhm.
your bank. Time you make a payment, 80% of it is going to go there. 20% is going to go to step one and two,
Okay.
right? All right.
Mhm.
Now you're paying 500. Let's say that 400 goes to our bank, 100 pays for the policy.
Mhm.
Now we have a limit of, let's say, $17,000 that you can put in here anytime you want to.
Mhm.
As long as we don't go over 17,000, like 1 cent over, the entire thing is tax free.
Okay. Oh wow. Okay. That's a word right there. Okay. So listen, there are so many nuggets that you just dropped with how you work with your clients. When some people are like, I don't make that much money. I heard you say it don't matter how much money you can make. It be $200, it could be $500. So that's not an excuse to have, right? So what are any of the, like, there should be no barriers to really working this kind of a strategy other than what you said, you gotta be approved, right? You still got to
Right.
apply and be approved. But
Yeah.
when I think about that, I really am interested in how do I make it work in an accelerated fashion? Like, yeah, 17,000 sounds good, but how do I get to the point where I'm really banking and I'm really making the most savings? And I know that having a business is always a strategy for bringing in additional dollars into your household. So when you talk about businesses and how they might be able to accelerate this strategy, having a business, how it might be able to accelerate this strategy, and how to find maybe some dollars in your business that might help you accelerate this strategy. Can you talk a little bit about that?
Yeah, well, this strategy, it is a strategy. This is not like a get rich quick kind of thing. This is like something that builds up over time. And so over the course of everyone's lives, like the statistics are, $1 million are gonna come in and out of our banking or checking account or saving account before we pass away. Right. But what do we have to show for that? Right. The bank is giving us little to nothing, right, for
Right.
keeping our money with them. And if you really want to get funky, right, the banks are all using this same strategy, right? How many times have you had 10,000, 20,000 in the bank and go to the bank to get some money and your money not there? They tell you you got to come back, right? It's because they get their money from the same place I'm telling you to put your money, and they
Mhm.
giving it back to you, still making interest off of you.
Wow.
And so, I don't want to go down the rabbit hole, but when I found out about this, I really took some time and I was thinking, I said, man, all this time I was thinking that whenever I went into the bank to get a sucker, that I was just having some sweet. I did not know that this is subliminal. Like they said, it's a bunch of suckers in here. Like, okay, all right. So I digress from that one. All right. So to answer your question, how about we use our own private bank to help us get out of debt faster, right? Instead of just paying our money from our bank account to pay off debt, why not put it in here and
Mhm.
pay off the debt and still gain interest off of that money, right? One way that I use a policy that I have myself, I looked at all of the bills that me and my wife had, and I found out that we were paying a little bit over the minimum payment on all of the bills, right? So that means $50 here, $70 here, $100 here, $20 here, over the minimum payment. I took that overpayment of all of them and put them together and made a policy out of it, right? And
Mhm.
that policy is going to get me and my wife out of debt 15 years earlier than what we were supposed to,
Oh, wow.
right? And so by getting out of debt 15 years before we were actually supposed to, now for 15 years, right, when this house will be paid off, now I'm going to have extra income because there's no one else to pay but us,
Mhm.
right? So this
Mhm.
is a way for you to leverage the money that you're already spending to help you get out of debt so that you can have that money coming back to you and not just paying, Wells Fargo, right? Or whatever mortgage company that you have. And so just using this strategy as a way for you to leverage to create that income that you're talking about.
Mm. So let me just reconfirm if I remember I heard you correctly earlier. This PEI, or when I borrow from it, is there an interest rate attached to it?
It is. It is. So you get a compound interest of everything in the pot, but when you borrow from it, there is a 4% interest rate, and that's called simple interest, right? But simple interest is different from compound interest, right? Simple interest is just off of that money that you borrowed. Compound interest is what you have over the entire pot. And so essentially, every time you borrow from it, you are sacrificing a little bit of the money that it makes for that year. But again, if you're using it to either create an asset or to pay off debt, it still makes sense.
Absolutely, especially when you think about some of these credit card rates, if you have less than perfect credit, or 25%. And if you can pay a card like that off using this strategy, that's going to save you so much in interest, right? So I see the trade-offs already for how people can start to bring extra dollars into their household by eliminating that debt that have those high interest rates through this strategy that you're discussing. So what are some other nuggets or pieces of advice that you want to leave people with before we get out of here today, Everett? Because you've been dropping so many gems and jewels.
Man, I really want to change the topic and talk about this thing that a lot of people are contributing to, and that's their 401k. Right?
Okay.
When you think about the 401k, my mama had a 401k, my grandma had a 401k. You know what I'm saying? I'm rolling with the 401k. I don't even know why I got a 401k, but I got one, right? And it's
And
great
we
for me.
fighting
My
for one
job,
at my job right now. They
yeah,
like, oh, we want
my job,
401k.
yeah, my job, they're gonna match me. This is gonna be great, right? And so 401ks are great when it comes to the contribution of putting your money into something, but it's not the safest place to put your money. If you look at what happened in 2008 when the market crashed, a lot of people lost their entire retirements because it was caught up in a 401k, right? When you think about the people that you know in your life and everybody that's tuned in today, who do you know that has rode off on that white horse, right? That glory vehicle, the 401k. Like, I don't know anybody who's retired on a 401k that's like living great. All right. The statistics are that people run out of that money in about 11 to 12 years.
Wow.
Okay. And so what happens with the money when it runs out and now you're just left with Social Security? What happens to that money when you have, $250,000, and then somebody says something, and then the market drops, and then you're down to 150. Like, what is retirement like when you're too old to go back to work? And so I want to focus on the power of the index, right? So an index is, again, having the opportunity to benefit from the market without actually being in the market, right? The index is like a mirror. When the market is up at 30%, you might cap at 15, right? When the market is below zero and it drops negative 15, you stop at zero. And so the next thing I'm going to focus on is, why not take a piece of your 401k, if you're contributing to that, and put it into an index annuity, right? They have index annuities now that come with lifetime income riders. And so as long as you keep the money in there for 7 to 10 years, once it's time to start taking distribution, actually, they have to pay you for the rest of your life, even if the accounts runs past zero.
Mm.
Let me say that again. Even if the account says zero, you're still going to get paid as long as you stayed alive, because you kept it in there for 7 to 10 years. And now there's no fluctuation when it comes to losing your 401k, like we talked about before. There's no market volatility. You're safe with the index. Once those gains are locked in for the year, they can't be taken away. And so that's another way that I'm helping clients. And I'm saying, man, do you contribute to your 401k? Or a lot of people have an old 401k from a job they're not even at anymore,
Mm.
right? So why not take that and put it over here so that we can guarantee you lifetime income? And really the strategies that I use get clients about 11 to 12% on average of how much they're making on that money.
Wow. Listen, these strategies, I want people to really be seriously investigating these things, like really taking the time to say, how can this work for my family? How do people get in touch with you? Are you doing consulting, coaching? Do you have an ideal client? Like, if I was going to refer somebody to you, Everett, who should I tell to come to you? Like, is there, because there's that application, there's the knuckleheads, and then there's the folks who just ain't ready because they just ain't ready, right? So what are some of the things that you should tell people, like, hey, this is the time, this is the factors to let you know, like, yes, you're ready for these types of strategies?
Yeah, well, I think that, the reason that I love the space that I'm in is I'm a broker. And so I work with, over 80 different companies that are in the industry. And there's a place for everyone, right? The reason why, I didn't, when we started off, when we we're saying, hey, Primerica wasn't the place for me, is because they have, everything that comes on their pot has to be through this Primerica vehicle. You can't reach outside. If I have someone with HIV, if I have someone who's had 3 or 4 heart attacks or strokes, I can't serve that client.
Mm-hmm.
And so by me being a broker, I pretty much can search the industry for what fits that particular client. And so there really isn't, a qualification other than somebody that just cares about their future. Like, of course, I don't want you to, have, cocaine on your record, that, you out here pushing P, but I'm just saying, for those that, care about their family and those who want to take those steps, and you have to understand that there is a financial obligation that you have to keep your policy going. I mean, yeah, we could help you. And so I'll drop my email in the chat for those who want to get a consultation, and we can kind of just go that way. And so again, my website is securingthelegacy.com, but I'm going to drop my email in the chat just for those who may want to get seen. Secure the Legacy.com. I know we got a hard stop in 2 minutes. And so we'll maybe come back at another time to talk about the cost remediation and profit enhancement. But for businesses, you definitely want to tap in with me on that, because I'm saving, clients hundreds of thousands of dollars on the employees that they have, if they've done renovation on the property. A lot of people don't know, when you have your own business and you're making or modifying a product, you get a research and development tax credit,
Mm.
right? If you have your own commercial property, I make sure you're not overpaying on property tax, right? If you have waste and recycling bills, I make sure that you're not overpaying for that. If you got credit card processing, I make sure that you're not overpaying for that. And so, again, I'm a one-stop shop for all my clients. I appreciate the time, Ashley, to be able to, come in here and sprinkle a little bit of the
Yeah.
legacy juice.
Legacy juice was delicious today, okay? Because I was served and I felt much more value added because of it. So thank you so much, Mr. Allen. Everett Allen from Secure the Legacy. You can visit securethelegacy.com, and you can also check him out on our Blueprint to Wealth Success Strategies tour. So visit us at p3.com, and also join our phenomenalhues.com community. Our Phenomenal Hues community is a place for a phenomenal woman. And we, of course, have phenomenal men who are a part of our network dropping these kinds of jewels. So come be a part of our community. Again, that's phenomenalhues.com. And this Mocha Money Monday was brought to you by the Welsons Financial and the P3 coaches. So thank you again for tuning in. We'll see you next week for Mocha Money Mondays. Peace.